Ladies and gentlemen, in today's video, I'm going to be describing exactly what is the London session liquidity sweep and how it can help you on your journey. And without further ado, let's do this. We'll start with the Asia session. The Asia session is the consolidation. It's when the price goes sideways. If you look at your chart, there are times when the price consolidates. Consolidation simply means that the price is in low volume, the price contracts, and it most of the time goes sideways. This usually is the Asia session. There are three main sessions in the forex market: the Asia session, the London session, and the New York session. So this right here is the Asia session. Okay, so around 8 a.m. GMT time is when the London session kicks in. Usually what tends to happen is that during the Asia session is when the market accumulates orders. What does that mean? What that means is that usually when the market goes sideways, there are millions of people all over the world that are placing their stop losses at the bottom and at the top of this consolidation. So like this, there are people who are placing their stop losses all over here, and there are people who are also, there are institutions who are placing their buy stops at the top of the Asia range, just like so. So we have both. At the bottom we have stop losses and sell stops, and at the top of the Asia range we have both buy stops and stop losses. Okay, just like so. So when the London session kicks in around 7 or 8 a.m., we need to understand this. The two goals of the price action is, number one, is to create or generate liquidity. Okay, create or generate liquidity, price action. Okay, and the second goal is to take out liquidity. Okay, because the market is heavily manipulated, and in order to make the market worth their time, they generate patterns which people all over the world are going to jump on, and then when the time is right, they're going to stop on these levels, and they're going to grab all the stop losses, buy stops, sell limit, all the orders. They're going to grab it, take it with them, and then go into a different direction. And that's the whole game of the forex market: to generate liquidity and to take out liquidity. Okay, these are the two objectives of the price action. Okay, so we're gonna keep that there. Remember this. So during the London session, what usually happens is that, let's just say the price aims to go bearish. If the market makers have decided to go bearish, usually what is going to happen first is that there's going to be a fake out. The fake out is going to first go to the upside. Now when the price goes to the upside, it has taken out all the orders which are on top of the Asia range right here. Okay, so that is a lot of liquidity is on top of these levels. Okay, so it's first going to go to the upside. Usually, but not always, there's going to be a supply zone. There's going to be a supply zone to the upside. It can be a 4H supply zone, 1H, or even a daily supply zone. That's our supply zone. That right end is so tiny. There we go. That's our supply zone. So first the price is going to stop hunt and take out all the stop losses, all those buy stops that are resting on top of the Asia session into the supply zone. And then from here, then it's going to make its way to the downside, taking out everybody who thought that once the price reaches here, that the price is going to appreciate, but it actually went past it. So this is what we see day in and day out in the forex market, and the same thing goes vice versa. If you can understand this pattern, it is really going to help your understanding of what actually happens pretty much on a day-to-day basis on different currency pairs. So we have the Asia range where orders have been accumulated. We have a supply zone above the Asia range, the Asia box, Asia session. During the London session around 8 a.m., 8 till about 10 a.m., there is a sharp move. This first sharp move is usually a fake out. Once the price takes out all the stop losses and buy stops that are resting around these levels, once that has been taken, the price then sharply moves to the downside. And this is the actual direction where the price wanted to go all along. So this is the London session liquidity sweep. Okay, so now let's go into the chart and see how this thing actually happens on a day-to-day basis. So right here we have a situation where we have our Asia session right here. You can see the Asia box. This gray box is the Asia session. Then right above the Asia session, we have an unmitigated supply zone right there. Once the price goes above the Asia session, you see this gap right here between the Asia session and the supply zone. This gap also is called imbalance. Okay, and on top of that, we have a lot of orders which are resting on top of the Asia session. Okay, right on this level, we have loads of orders into this supply zone over here. So once the price reaches this supply zone, this first move to the upside is actually a fake out. Usually the first moves in the London session around 7 to 8, they are usually the fake outs. It is the fake move. It is the move which grabs liquidity. It is the move which entices people to go long, but in reality the price is going short. So from this, if you know this is a fresh supply zone, you just place your order and you just sell from this level. Okay, if we look at what happened on the previous day, we have the same situation. So we have the Asia session right here, which is our consolidation. Okay, we have our Asia session within that box, and we have our supply zone. Our supply zone is above the Asia range. Okay, once again, what happened around 7 to 8 a.m. we had a fake out. We have an imbalance right here. The gap between the Asia range and this wick right here, that's called imbalance. Okay, so we had imbalance, which had to be balanced by the price, and on top of that we had the supply zone. So the price stop hunted all the orders which were resting on top of the Asia session into our supply zone, and then the price did what? Fake move, then the price dropped. Typical. Happens day in and day out. Okay, now we have a situation where the price did the same thing but in the opposite direction. We have this is our Asia box, Asia session, marked out. We have our demand zone. This example is a bit more complex, but nothing too serious. We have a demand zone right here in the form of a doji candle. Okay, we also have liquidities resting below this swing low right here. Okay, liquidity resting over there. We also have liquidity resting below the low of the Asia session. So the price at 7 to 8 a.m. what happened? The first move took out the liquidity which was resting in these levels, took it out into the demand zone. This was the fake out, and then the price went up. Happens day in and day out. Okay, so time and time again we can see that there is an Asia session consolidation, and the price stop hunts into a demand zone or into a supply zone. Fake move, that's the actual move. Another Asia box. What does the price do? We have a demand zone over here. Stop hunts into our demand zone, goes to the upside. Asia session over here. What does we have a supply zone over here. What happens? The price stop hunts into the supply zone. This is the fake out, and then drops. It is really going to change your game, and hope this video was valuable to you. If you found this video useful at any point whatsoever, please like, share, and leave a comment. And I will see you guys in the next one. Take care.